So, let's get into today's topics. First of all, gold has officially crossed over $4,000. The path to $5,000 is not far away, and it's not speculation. It's structure. This isn't about hype or short-term sentiment. What we're seeing in financial markets, commodities, geopolitics, it's a reflection of the deep systemic changes that have been years in the making. Banks today, for instance, hold more gold than US Treasuries. You need to think about that for a moment. It tells you everything you really need to know about where confidence now resides. The global financial system is quietly but decisively prioritizing tangible value over paper promises, essentially the debt-based Ponzi scheme. So let's break this down. First of all, central banks and governments are printing money to sustain a financial system that is no longer sustainable itself. Since January of 2025, this year, the US dollar has already lost over 8.3% of its purchasing power. That's not an abstract number. This is the silent erosion of wealth in real time. Meanwhile, US Treasuries, US debt, once was considered to be a gold standard of global safety. It was treated that way. Now these treasuries are under immense pressure, and this pressure has been building for years. So essentially, the bond market, once the core of global liquidity, is now a ticking time bomb. It's a ticking liability. And that's why regulators and financial institutions have quietly reclassified gold as a Tier 1 asset class under Basel III regulations and requirements. Ladies and gentlemen, that single move alone has elevated gold to the same status as cash. Basically, zero risk. It's a quiet admission, you could say, that the foundation of fiat finance is cracking, breaking, whatever you want to call it. But it's falling apart, basically. And that's why they're trying to front-run people on this, and that's why it never made headline news. So what we're witnessing isn't just a gold rally with gold breaking $4,000. It's basically gold being reintroduced into the monetary system, not as an investment, but as collateral. Digital integration at this point is inevitable, because this is where we're going. And this is where it gets interesting. I've been working on this for many years, trying to understand the trajectory of where the merging between gold and digital assets were going to take place. We already can confirm that the world is not going back to purely physical gold standard. It's moving towards a digital gold standard where essentially tokenized value and real physical